Hello and welcome to this video. I am Dr. Subayal and this value packed video is for anyone who wants to start his or her investment journey with confidence. And this video will not only answer the questions which all the beginners have, but also help you in investing your first 100 US dollars or Great British pounds in the best possible way. But it can be any amount depending on your financial situation. So I have observed that when we start our investing journey, we have three main questions. So the first questions which beginners ask is, which stocks should we buy? These questions will be answered in the first part of the video where we will cover the following topics. Number one, what are index funds? Number two, how index funds solve the problem of choosing the right stocks? And number three, what sort of gains can we expect by investing in index funds? And the second question which most of the beginners ask is how to deal with market crashes and fluctuations in the price of stocks. And this question will be answered in the second part of the video where we will be exploring the power of long-term thinking. Believe me, this section alone is a gold mine and encapsulates over 15 years of knowledge packed in a few minutes. This part will explain number one, how to control your emotions when the market crashes happen. Number two, how to stay focused on the long-term perspective instead of short-term events. And number three, how to have the peace of mind during your investing journey. And the third question which most of my audience in UK and USA ask is, which platform can I use to invest my first 100 US dollars or my first 100 Great British pounds? And of course, this amount fluctuates and depends on the financial situation of the people who ask this question. So this question will be answered in the third part of the video, which is a step-by-step tutorial that will take you through the entire process of opening an account with one of the world's best investing platforms called Vanguard, so that you can invest your first 100 US dollars or first 100 Great British pounds with confidence. As I said earlier, it can be any other amount which you want to invest. So this part is very important because it will help you in understanding the following key points. So the first point is you will understand what the ISA or Roth IRA account is, depending on whether you are in UK or USA. And the second key point is to understand the concept of accumulation while investing in the index funds. And the third key point is to start your investing journey with confidence in the right way. So does that sound interesting? If yes, let's proceed to the first part. So let's start with the first part of the video, which answers the question, which stocks to buy. So this part will provide you with solid knowledge, which will help you to stop wasting time and energy on deciding which stocks to buy by leveraging the power of index funds. So let's understand and explore the power of index funds and see how they give us peace of mind and ability to create generational wealth. So for many people, when they start their investment journey or people who are already investing in the stock market, they always ask one question to themselves, which stocks should they buy? So it is a very broad question. It is like saying, which clothes should I wear today? But of course, when it comes to clothes, our inspiration mostly comes from the best designers in the world whose designed clothes act as reference points whether we admit it or not. So the area of investing is no different. Just like we have some outstanding designers, we also have some masterminds in the investment world too. The best thing is that their advice is available in the form of books and interviews and costs way less than the dresses designed by designers. So one of the best designers or masterminds in the world of investing is Warren Buffett. He started from nothing and has created an empire of 80 billion US dollars, and just 1,000 US dollars invested with him in 1964 would have converted to 1.5 million US dollars today. So, as we can see in his interview with CNBC, the best thing which a person could have done on the 11th of March 1942 when he bought his first stock would be to just invest in index funds and not wasting any mental energy and time by getting drowned in the headlines of news articles, market sentiment, and even price charts.
The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amounted to, and it would come to $51 million now. And the only thing you had to really believe in then is that America would win the war and that America would progress as it has ever since 1776, and that American business, if America moved forward, American business would move forward. You didn't have to worry about what stock to buy. You didn't have to worry what day to get in and out. You didn't know the Federal Reserve would exist, whatever it might be.
So investing in index funds simply removes the stress about which stocks we should buy and when should we buy it, because we can just simply invest in index funds via dollar cost averaging. So as he states in his interview, would you believe that if someone had invested $10,000 in an index fund such as S&P 500 back in 1942 and reinvested the dividends from that, it would have accumulated and become 51 million US dollars at the time of the interview. So what does an index fund actually mean, and what is S&P 500? So an index means a list, and an index fund is a list of companies. So any index fund consists of a list of companies either in an industry sector or in a certain country or region. So when you invest in an index fund, your funds are distributed across all the companies of the index fund. So essentially, as the saying goes, don't put all your eggs in the same basket. Think of each stock as an egg and the basket as a company. So in the same way, we don't want to invest all our money into the stocks of just one company. So if one basket falls, or in this case, if one company goes bankrupt or does not do well for many years, the other companies in the list will compensate for that loss. So if one basket falls out of our hand, the other basket will still have our eggs unbroken. So now we know that an index is a list and an index fund is a group or a list of companies, and S&P 500 is a list of 500 largest American companies, for example Disney, Tesla, Microsoft, Johnson & Johnson and many others. Therefore, when I am investing in an index fund, I am essentially allocating my capital intelligently by diversifying across many different businesses in a region or in a sector. Therefore, I am not betting on the performance of a single company, but the performance of a whole sector, or let's say a country or region. Excellent. So we are done with the first part of the video. And now you know what are index funds, how they help us to stop worrying about which stocks to pick, and also what sort of gains can we expect by investing in index fund, as per the opinion of one of the best investors in the world called Warren Buffett. And now let's proceed to the second part of the video, which answers the question, how to deal with market crashes and fluctuations in the price of stocks. So this part covers the importance of detaching our emotions from the investing decisions and how the long-term thinking can keep us focused on our investing goals. At the end of this section, you will stop worrying about the market events and crashes and rather focus on the big picture and long-term perspective. So let's explore the importance of long-term thinking, which shatters these problems. Now, of course, in the long term, the stock market goes up. So look at the S&P 500 stock. In the long term, it goes up for sure. But in short term, there are always drops. And it means that you will benefit from investing the most if you buy in small chunks and don't invest a huge amount at once. So you invest small chunks of money over time to dollar cost average, because you don't know what is going to happen after 3 or 4 months or so, and even in 1 to 2 years. The reason is that the stock market can crash at any time, but overall, over the long term, it goes up. For example, if you have saved 10,000 US dollars over the course of, let's say, 2 years, and you invested all of it at once in the stock market, or let's say for this example in S&P 500 at this point, just imagine what you would be thinking as your investment was going down continuously during each week, And that too, when combined with the fear of media, news, and your stock purchasing app turning red, surely this will give you sleepless nights and you will ultimately sell your holdings and make your paper losses real. But on the contrary, if you had divided the same 10,000 US dollars into small chunks of 200 US dollars each and invested 2,000 US dollars each month, what would have happened? You would be buying continuously when the S&P 500 was going down and even when the market was bottoming. And the good thing is that you would be buying continuously when the market was going up again. So your first 200 US dollars which you invested over here are recovered, and every dollar which you invested on the way down is now in profit, and every dollar which you invested on the way up is also giving you the profit. How amazing is that? That is why investors like Warren Buffett emphasize on the power of compounding and long-term investing. So in the same interview of Warren Buffett, the lady mentions investing in long-term.
Of all the things that have happened since 1942, we've had 14 presidents, 7 Republicans, 7 Democrats. We've had world wars. We had 9/11. We had the Cuban Missile Crisis. We have all kinds of things. And I pointed out that if you put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amounted to, and it would come to $51 million now.
So the point which Warren emphasized is that the businesses and also economies of nations are resilient and survive the short-term events. So essentially, when you invest in index funds, which tracks the performance of large companies in a region or sector like the S&P 500, which is just one type of index fund, you are not just betting on the performance of a single company, but on the performance of national economies in totality. So we are betting that the economy of a country will continue to grow. So he mentioned that during his life, the markets have been through a lot of events of enormous magnitude, and those investors who had a long-term perspective in mind created enormous generational wealth. Excellent, and I congratulate you for completing the second part of the video also. So now you know that the economies of nations survive the short-term economic events, as Warren Buffett said in his interview. And also we know that when we invest in index funds which track the performance of national economies, the price will recover. Since we are betting on the performance of national economies which are resilient and have previously survived some big economic events and crashes such as the Panic of 1907, the stock market crash of 1929, the Black Monday crash of 1987, the stock market scam of 1992, the Asian financial crash of 1997, the dot-com bubble burst of the year 2000, and the 2008 stock market and housing crash. Furthermore, the 2010 flash crash, the 2015-16 China stock market crash, and here is the most recent one, the 2020 coronavirus crash. So you saw all these economic events and stock market crashes just now. But you see, the businesses eventually recover and the economies are resilient to these events. And this is exactly what Warren Buffett believes in. And now we proceed to the third and final part of the video, which answers the question, which platform can I use to invest my first 100 US dollars or my first 100 Great British pounds? And also it can be any amount depending on your financial situation. So we will cover all of that in a step-by-step tutorial, and you will open your account in the Vanguard platform and start investing with confidence. And over here I must mention an important point. So Vanguard has a separate website for the USA and UK clients, but the interface is quite similar and so is the process, and therefore we will focus on their UK website, which is vanguard.co.uk. But trust me, if you are from USA, you won't have any issues, and if you think that this is challenging for you, don't hesitate to mention that in the comments below. And I promise to do a walkthrough video of Vanguard USA platform also. So just to tell you a little bit of background about Vanguard, they are known all over the world for their index funds which are passively managed. So essentially you don't need to pay a heavy fee to a manager who manages your funds. And I believe that it is the most cost-effective way to invest also. So here are the steps to start investing your first 100 Great British Pounds on Vanguard.co.uk platform. So first of all, type Vanguard.co.uk in the browser. And once this page is opened, come over here and press open an account. We are investing our first 100 Great British Pounds. So you come over here, new to Vanguard, and press start my application. And over here just select the option stocks and shares ISA. ISA account is very useful because you have a limit of £20,000 here in the UK. It is absolutely the same concept, just like the Roth IRA in USA. So both of them are conceptually the same. So essentially, the government allows you to invest a certain amount of money up to a certain threshold, which is £20,000 per year in the UK. And if you invest that money in your ISA account, you will not be taxed. So that is why we go for this option and we select open an account. It will take a few seconds and it will take you over here. Then over here, you just go through all this text. You can read these documents. And then if you agree with all these things, you check this option and then you select proceed. And once you land on this page, just simply come here and click on this button, add more investments. And over here you have blended funds, you have equity funds, and you have fixed income funds. So we already know at this point that investing in index fund is the best way to go. So we already know the advantages of index funds. So what we are going to do is that we are going to select this option, equity funds. And if you want to invest in the top 100 UK companies, you just simply come down, down and down and come over here, right? Right here. FTSE UK All Shares Index Unit Trust Accumulation. Accumulation means that since many of the companies which are included in the index, and index is a list as I already mentioned, so all the companies which are included in this bucket in this index fund, some of them will pay you dividend each year. A dividend is a portion of the income of the companies which it distributes to its investors or shareholders. So owning a share is becoming a part owner of a business. So some companies distribute a part of their earnings to their investors or shareholders, and accumulation means that the dividends paid to you by the companies in the index fund each year or on quarterly basis will be used to buy more shares of this index fund. So that money will be used to buy the shares of the companies in that index again on quarterly basis or on yearly basis as you receive the dividends. So each year the number of your shares in the index fund will grow, and then as a result you will receive even more dividends. And it simply means that over time, your holdings of that index fund will snowball and make you really rich over time. So over here, you can just either select a single payment or regular monthly payment. So you can select the option which you like. So I will go for 100 Great British Pounds per month, which I will invest each month over here in this index fund. FTSE UK All Share Index Unit Trust Accumulation. And if you want, you can also distribute your $100 or $200, whichever you can afford monthly, into another index fund also. I personally like S&P 500 a lot. So I can select this S&P 500 ETF over here, and I can put like 100 pounds over here. And since you have not yet invested 200 pounds into your ISA account for this year, you still have 20,000 pounds remaining. And over here at the bottom, you can also see that you have selected 2 funds. So you can distribute your amount into as many funds as you like over here if you want to diversify further. But it is just a matter of personal preference. For me, if I will invest in the top 100 UK companies, I'm already very diversified. And then if I put an equal amount in the top 500 US companies, again, I'm pretty much diversified into the US companies also. So for me, both of them are more than enough. So if you want to start with just 100 pounds, don't worry, you just need to put 50 pounds and 50 pounds in both these index funds, or else just put 100 pounds in one index funds. It is absolutely up to you. So for example, in my case, I am selecting a regular monthly payment of 200 pounds. It essentially means that 100 pounds out of those will go to the top 500 US companies and will be invested in those companies automatically. So it means that out of these 100 US dollars, 20 cents will be allocated to each and every company in the list of the top 500 companies of S&P 500. Simple and straightforward. And over here, since I'm allocating 100 pounds to FTSE UK, it simply means that £1 will be invested in each and every of the top 100 UK companies. So I don't need to do any work. I don't need to worry about the market fluctuations. I don't need to worry about the economic events. Each month, £200 will go from my salary or from my savings into my ASA account and will be invested automatically. And after that, I just simply press next. And over here, it is just simple and straightforward. So you put your title, your first name, your middle name, your last name, your email, then you confirm your email, the national insurance number in the UK which you have, and of course the country of nationality too. You don't need to be a UK citizen to have an ASA account. You need to have the right of work, and then you have to be settled in UK to have a national insurance number. So if you are a foreigner and if you don't have a nationality of UK, still you can invest over here, because all what you need is a national insurance number, an email, and of course an address in the UK. Then you just simply put your date of birth, month and year over here, and then press next. So over here I have filled the form with my details, and then I press the next at the bottom. So let's do that. And over here you just simply select a username, you select a password, confirm password. Then you simply mention your phone number and you are done. So after that, I can just simply press the next button at the bottom. So after you have entered your details, you will come to this page over here. You just simply come here and add your bank account. So on this page, just simply add your bank account details as you normally do for setting up a direct debit for any utility bill. No difference at all, pretty straightforward and simple. And then you mention the direct debit details. When would you like your regular payments to start? So just mention over here. So mention the day, the month and the year when you want to start investing. And then you just simply click this button, confirm bank account details, and you will start off with your investment journey. So brilliant! Now you have completed the third and final part of the video. And now you know how you can invest your first 100 US dollars or 100 Great British Pounds in index funds by making use of the Vanguard platform. And you also know what an ASA or a Roth IRA account is. And you also know the power of accumulation in an index fund. So now I firmly believe that you can start your investing journey with confidence, and now you know that investing is easy and not as complicated as media makes it for you to keep your eyes focused on their news. I hope that you enjoyed and liked the content of this video. So I strongly recommend subscribing to this channel because I cover topics related to investing and personal finance on this channel each week to help you in your investing journey. I'm Dr. Subayal Khan. Thank you for watching, and I will see you next week.